and welcome to the Trade Finance Distribution Initiative Podcast, where we explore the latest innovations transforming the global industry. I'm your host, Doris Kononowicz, and today we're tackling one of the most pressing issues, the legal and regulatory framework shaping the digital transformation of trade assets. Now, it's not news that trade finance industry is still heavily based on paper processes that slow down transactions. They limit liquidity and introduce lots of risk into the mix. According to ICC, nearly 80% of trade finance transactions involve manual processes and paper-based documentations. And I think this is just a staggering inefficiency in a market that is worth over $5 trillion annually. However, this shift is slowly but surely making its way through as digital trade documents are now being introduced. There are now more smart contracts and more tokenized trade assets slowly making their way through the system, driven by regulatory reforms, technological advancements, and generally a growing appetite by investors for alternative assets. And this is our focus today, where we'll be talking a lot about this and disambiguating the pros and cons around why digital assets are important today. I'm joined by Professor Sarah Green. She's no stranger to the TFDI. She's the head of digital assets and trade finance at D2 Legal Technology, where they have a sharp focus on smart contracts and legal frameworks enabling DNIs. Sarah, really lovely to have you here again.
Yeah, it's a pleasure to be here. Thank you for asking me.
Yeah, let's talk about really some of the progresses I think that's been made over the past few years and the challenges that we're still seeing around this industry. I mean, there's been an industry-wide adoption or a recognition to start with of the inefficiencies around paper-based trade finance. But the adoption here of digital solutions has still been somewhat slow. In your position and in your experience, what has been sort of the key legal barriers preventing full-scale adoption of digitization?
Well, I think the legal barriers were quite obvious certainly in the jurisdiction of England and Wales and for English law until September of last year, because until the enactment of the Electronic Trade Documents Act, it simply wasn't possible for electronic trade documents to have exactly the same legal functionality as paper. And of course, that was based very much on MLETR, which is something that is changing legally in several jurisdictions now across the globe. But that's now a problem that's gone, certainly for English law. And just in case anybody who's listening doesn't realise that English law is used beyond the geographical borders of England and Wales, so you can, select it as a contracting party no matter where you are in the world. So it is a pretty big export, a pretty important legal entity, really. So that legal problem has now gone. But I've said before in a few forums, although that was pretty difficult to do, I think that was the easiest part of it. So I think the legal barrier has been broken down, but that doesn't mean that adoption and implementation follows inexorably from that, because there are an awful lot of other barriers in the way that we need to get over.
And one of them is interoperability. How far away are we from sort of seeing a situation or a position where the light bulb kind of just switches over and, across different jurisdictions, we start to align in terms of using digital trade documents? Because yes, the framework is now there. It's now about getting people to adopt it. What do you think? How far away are we from kind of having those conversations around pushing for this to be implemented, not just by, say, banks or institutions, but also by, their clients and their customers across different jurisdictions?
Yeah, I mean, it's hard to put an actual figure on it. It has been. I mean, I hear a lot that adoption has been slow. It's actually been quite a lot quicker than I was expecting.
Oh, really?
And yeah. And what has happened, which I guess is natural, is it's a sort of snowball effect. So once we had the change in English law, I think that has led to a speeding up of changes elsewhere. As you rightly point out, there is so many moving parts to this, though, and interoperability is a big issue because, of course, by definition, what we're talking about is a transnational phenomenon. And there's various sort of interoperability issues because, of course, there's technological interoperability, which is probably the easiest thing to solve. It's all very well for me to say, not being a technologist, but, if you do get technologists in a room and there is a will, then it's not that difficult technically to build the technology. But I think the real interoperability issue is partly the legal. It's partly getting all those legal systems aligned. Although, as I've said, to the extent that you can choose English law, that's not absolutely necessary for all purposes. But there's definitely a sort of cultural, political with a small p, need for interoperability, because there are some jurisdictions that are just keener on this than others. And then within those jurisdictions, again, as you rightly say, there are some entities that are keener on this than others. So there are some banks, for instance, I think Lloyd's deserves a special mention for being very keen on looking into this and what can be done. There are other banks, there are other large users, I guess, or potential users of this, who are still, I think, maybe not unconvinced that it's a good idea in theory, but unconvinced that now is the time to invest resources and make it a practical reality. Because, the point is that there's a lot of firefighting going on at the moment. Of course, budgets are squeezed, I think, across the board. And I've said this before in other fora, the thing about electronic trade documents and digitalizing trade is that it is undoubtedly a huge efficiency saving in the medium to long term, and it is definitely better in terms of avoiding fraud and friction. But of course, saying to a potential user, well, you've got all these things going on, and at the moment you're used to the costs and you're used to the risks of paper documents, but if you invest all these resources and put all this effort in, that stuff will cost you less in the future. And of course, that's not particularly pressing on a day-to-day basis. So I guess it's the endowment effect, really, that it, to my mind, is affecting interoperability. So I think it's hard to put an exact time frame on it, but I do think that what will happen is the more movement that is made, it'll be exponential, right? So the more movement that is made, the more movement that will then, I think, come. So yeah, I'm unusual in thinking that actually more has happened in where are we now? Nearly 6 months since the ETDA was passed. More has happened in that time than I was expecting.
Yeah, and I think it's a lot of proof points. Once you start to see a lot of proof points of how people are, saving costs and streamlining their processes, maybe that people can actually just realize that this is a better way to go. And we've seen, huge institutions like BlackRock for tokenization of trade assets, being the shining light and the example of, we can take on the risks and we can actually, do this at a bigger scale. But there's still that wariness from a lot of, asset managers in general, looking at or experimenting with blockchain-based trade receivables and invoice tokenization. From a legal perspective for them, what needs to be in place for them to feel a bit more comfortable and, accept that this asset class goes just beyond the usual, and, tokenization of real-world assets is a possibility.
So I think that we're, there is legislative movement again across the globe on the broader question of digital assets, that, as you say, so tokens on a blockchain that don't fall within the electronic trade document definition. So there's definitely movement on that front as well. It doesn't, on the whole, in most of the sort of major trade jurisdictions, it doesn't necessarily require legislative change. It's a sort of softer common law set of rules, which doesn't necessarily make it easier or harder. So I can certainly say what's happening in England and Wales, since I've already made the point that that's an important jurisdiction. So there is a bill going through Parliament at the moment, the Property Digital Assets, etc. bill. That is, in fact, its name. That wasn't just what I called
it. Etc.
Yeah, it is. It wasn't my choice of name. But it's a bill that we put together when I was at the Law Commission, which explicitly allows the common law to recognise digital assets in the same way that they have recognised, or that it, I should say, has recognised conventional assets in the past. Why is that important? Because that gives gives the party a property right in that asset. And that is super important, because if you don't have a property right in the asset, in the token, then there's all sorts of protections which are not available to you legally when things go wrong. So if that asset is lost or interfered with, you really need a property right that's very valuable. And at the moment, a lot of legal jurisdictions struggle with recognising property rights in digital assets because they regard them as intangible, and historically intangible things like just debts and rights have been treated very differently. So what jurisdictions are trying to do at the moment, this has happened in the US in Article 12 of the Uniform Commercial Code. It's happening in the UK with the Law Commission final report on this, and with the bill that's going through Parliament, which is to say, where you have an asset that emulates a conventional asset, because it is, they might be intangible. I don't really care. I don't think it's that important whether they're intangible or not. But there are assets now, and this is the important point, that solve the double spend problem, because they exist as an independent thing, like a coin, like a pound coin or dollar note, that you can hold, that you can pass on entirely to another party, divest yourself of those rights, which with a lot of digital things like Word documents we can't do. But on a distributed ledger, you can do that. So what you have is a digital asset that sort of sits between pure rights, intangibles that are treated differently by the law, and conventional assets are the things that we can easily recognise property rights in. And so the legal movement at the moment is going towards recognising those digital assets, like an NFT or a token related to a real world asset, as being things that we can have property rights in. So it's a real sort of lawyer's law question, but it's, as you can hopefully see from that, a really, really important thing to establish.
And the right step, the direction that everyone would want to see, once we have these like legal frameworks in place. There are a few proof points with, let's say, Niger being able to create a technology that promotes DNIs. And, I know that one of the hurdles, like in digitizing trade finance, is ensuring that DNIs, like e-bills of ladings and promissory notes and e-invoices, are across board recognized in all the jurisdictions. And we've just talked about how the UK and Ireland set the pace for this. How exactly is digital legal technology kind of working with regulators and industry bodies to keep driving this forward and keep promoting this?
Yeah, so what we do at D2 Legal Technology is really, well, I see us as being a bridge really between technology and law, because I think that's what's made this whole area pretty difficult to navigate, because on the whole, and certainly in my experience, there are a lot of lawyers who, brilliant at what they do, but don't understand the technologists. And the same is true of technologists who obviously, why would they concern themselves with difficult questions of law, because that's not their bag. But of course, when you've got two different worlds really that need to speak to each other, but in this case, quite literally speak a different language, then that's always going to make it very hard to move forward. And then once you put regulators in the mix as well, and regulators are, of course, concerned not necessarily with the thing and its nature, but the behaviour of parties in relation to it and how it's used. So you've got them looking at a risk profile, lawyers looking at the sort of private law implications of does this, how do we protect this when things go wrong? And then you've got technologists who just want to make the best technological product. So really what I'm trying to do at D2LT is be the bridge, if you can call it a bridge between three things, just fill that gap and get all of those three entities to talk to one another, because we at D2LT between us have enough shared common language of those three areas that we feel that's the service that we can provide. And that's, I think, what really needs to happen.
And how about for trade receivables? Because this is becoming also, there's a lot of interest within this area, making this an interesting asset class. Are there any legal frameworks in play that will allow a little bit more structured or scalable securitization of trade assets currently, or precedents that will support a wider adoption per se?
I think this probably fits in with what I was saying about regulators and looking at, the behaviour of assets. So there's a lot of presumptions, and I guess they're inevitable, that because digital assets, and I'm using it as a deliberately broad generic term there, because digital assets are new in their form, in their technological form, that therefore we have to start from scratch. And, it's almost as if we have to design new legal and regulatory systems because these things look a little bit different. But actually, that isn't the case. And I think slowly, that is a recognition that is being picked up. I would say in the last year to 18 months, regulators and lawmakers across the world have sort of come to that realization. I would say 4 or 5 years ago, it was still very sort of generally believed that we would have to, start the whole thing from scratch and design it around digital assets. I think there are little sort of nooks and crannies where that might have to happen. But in the main, if we're talking about, say, tokenized securities, then we don't need to do that, because actually, aside from saying that token can have property rights, which I've already dealt with, the fact that it's used as a security and the sort of behaviour of parties in relation to it as a security means that actually it can be treated analogously to more conventional securities. So you can actually just then plug into the existing legal and regulatory framework that exists for securities, which is great because it is about the behaviour and the risk profile of that thing. And that actually isn't affected by whether it's in digital form or another form.
We'll talk about some of the risk factors, but first, we've talked about UK leading the charge with pushing some of these regulations and laws around. What other jurisdictions do you see leading the way other than the UK, and where are we seeing the most resistance so far?
So there's the usual sort of very forward-thinking jurisdictions. Obviously, we've got Singapore, we've got Dubai. They are very much and have been for a few years now in the vanguard of this. Abu Dhabi Global Market, of course, is probably the one that springs to mind to a lot of people as well. We've got Bahrain, we've got Kiribati, tiny jurisdiction, but so some of the surprising ones. And then if we sort of move closer to home, certainly to my home, France and Germany are moving along. Luxembourg has definitely been very proactive in this space, and of course the US. So the US is obviously a strange mixture. It's a common law jurisdiction, but it has the mixture of sort of federal and state law, and it's got the Uniform Commercial Code. I've already mentioned Article 12, and when I was at the Law Commission, we worked alongside the authors of the Uniform Commercial Code, and we were all, trying to do the same thing. So that's promising. And Australia is also moving now. It has an Attorney General's consultation out on the digitalisation of documents. So, it's all looking pretty good. There are also more developing jurisdictions that are thinking about it. So I'm not sure really that I would say, actually, I wouldn't even go as far as saying that I've encountered resistance. I'm not saying it's not out there somewhere, but the sense I get is not really so much resistance. That sounds a little bit active to me. I think there are some jurisdictions, and they're probably the less developed ones, where there just simply isn't the resource to do this at the moment, or the energy or the sort of governmental capacity. So I think that's probably the best way of putting it. I think in terms of, your obvious first world commercially forward-looking jurisdictions, it's generally good news. That's not to say that they've all taken, that's true for electronic trade documents. I think in terms of digital assets, there is a little bit of a difference in treatment. So for instance, Australia and Hong Kong have taken a slightly different approach to England and Wales, for instance, and the US. But they're all sort of going in the same direction. They've just done it in a slightly different way. So I'm certainly not aware of any national resistance to this. I just think there are some jurisdictions, inevitable.
Moving.
Yeah.
And you mentioned emerging markets. I wonder if the law has any considerations for um, SMEs, that might be working with banks, asset managers, investors, and how they would be incorporated in part of this changing landscape. Because at the end of the day, as Rich said, we want this to be possible for everyone. You want this to be a very end-to-end solution that can be transferred from one party to the next. Does the law accommodate SMEs and more emerging markets that might be slower moving in terms of incorporating the use of digital instruments or assets within their legal framework?
Yeah, so the law, and certainly the law that I've talked about so far during this podcast, is doesn't discriminate really. So what what it does for the big players, it does for the SMEs, and for the little guys too. The individual, even sort of sole traders, they're all included as a matter of the legal sweep. But the point remains, of course, that it's probably going to be much harder for SMEs and smaller players to make these kind of changes, and they're probably far less likely to do it in the first instance, because why would they not wait for somebody with more resources to set the ball rolling and make all the mistakes that they can then learn from. So I think that is definitely a really important consideration. There's no question about that in my mind. But rather than it being a legal one, I think it's a sort of industry concern. So I know it's definitely on the radar of the International Chamber of Commerce, the ICC. That is definitely something that they provide support in relation to, because it's a sort of factual, logistical question, really. And again, it's another one of the things that at D2LT we aim to help organisations with is guiding them now that legally they can do these things. As I said at the very beginning, that's fine. That's one question answered, but that doesn't necessarily mean that implementing it and making it happen is necessarily easy. The law is it's necessary, but it's not sufficient. It allows you to do it, but it doesn't tell you how to do it. So I think, industry support from institutions like the ICC and from advisors like D2LT. I think that's really the best way for SMEs to make the most of this. I think is the best way of putting it.
No, I agree. Definitely, it's everyone has to kind of look at how to bring everyone up to speed, and also make considerations for that. As you rightly said, the law doesn't discriminate. I don't mean to drag you down the barrel hole of AI, but we have to talk about it. As quickly as there are advancements in technology, this is one that is suddenly gained rapid momentum, and there are lots of pros and cons of using AI with trade finance. We can use it to detect, trade-based money laundering, fraudulent invoices. You can check out fraudsters. But on the other hand, you can also use AI to generate synthetic identities, a deep fake a trade document, and, just generally create some sort of a fake or forged invoice, bill of lading, letters of credit. How is the law approaching AI so far?
Well, the short answer is it's not doing very much at all. So obviously the law always lags behind economic and social changes by its very nature, because it responds to disputes, and of course you don't tend to have a dispute until something has been used for a while. So that's no surprise. It doesn't have to be like that, and there are certain times when that doesn't happen. Just to give an example, I suppose there was a sort of fairly forward-looking project at the Law Commission on smart contracts. It didn't predate all smart contracts, but it was intended to sort of speculate about problems that might occur. But that's the unusual thing. So the law usually lags behind, and there are, I think, I'm just trying to sort of. There is the easy sort of thing to point to at the moment is there is an AI bill, again, going through the English Parliament. This is nothing to do with me, this one. But it's about ensuring that AI systems are used in a safe way, are regulated, are policed, I suppose, is the best way of putting it, in terms of what they're allowed to do as a legitimate entity, and you know, what they can affect and what they can't. Now, that's a private member's bill. I don't know, it hasn't passed yet. I don't know whether it will. It's not the only initiative. So there is, it's not purely a legal one, but there are strong government initiatives at the moment. They've established an office for AI, so to look into sort of practical ways of ensuring its safety. So, I mean, as I said, the short answer is the law isn't doing very much at the moment. There will be a little bit of what I've said before, in terms of there are all sorts of legal rules, of course, that guard against fraud, that guard against non-consensual interferences with, you know, important documents and things that we want to control and stop modification. So there are all sorts of legal rules that already apply to that, and, you know, on paper. That we also have a Computer Misuse Act, from 1990. So there will be some parts of the law that can be brought in and won't be inapplicable simply because that interference was made by AI. So that's the first thing to say. Well, that's not the first thing I've said, but I think I'd probably start there, thinking about it from a legal point of view. And then, you know, as I said, there are certainly governmental initiatives, and we have a bill going through Parliament. But I don't, there are similar initiatives going on in Europe, but I'm not aware, and I could be wrong, could absolutely be wrong, but I'm certainly not aware of any major jurisdiction that has as yet implemented a sort of rigorous, across the board AI governing model.
Is there any part of this that concerns you, any part of the use of AI that currently concerns you, that you think, oh, this might become a problem in the future?
Yeah, there's lots of AI that can...
Keeping you awake at night.
Yeah, I'm not one of the people who's particularly scared about it. I mean, I know there are a lot of people who think it's going to, you know, bring about the end of the world. I'm not really like that. And I think with all of these things, you know, there are obviously going to be always nefarious uses to it. But there's, you know, also an awful lot of good that can be taken from it. You know, certainly, for instance, in medical context, it can be fantastically helpful. So I don't think we can, you know, we should lose sight of that. I'm always optimistic in these circumstances. I mean, I do think that the potential ability of AI to interfere with electronic and digital things, I mean, is obviously a risk. But I don't actually think that in aggregate terms it's any less of a risk than the ability of humans to interfere with paper and to do, you know, money laundering with cash. And I just think, and you know, I know I've said this, and you and I have talked about this before, that it's the difference between familiar and unfamiliar risks. And of course, once you have an unfamiliar risk, then that is always going to be something that people find less appealing and harder to deal with than a risk that they've just accepted their entire lives. So that's what AI is for me. It's new risks. I don't think they're necessarily any worse or any bigger in absolute terms. And eventually, you know, I think we will just... the ingenuity of human beings that allows us to create dangers, you know, is countered by the same ability to deal with those dangers. I mean, quite frankly, the thing that worries me the most at the moment in terms of digitalization is quantum computing, because once we have quantum computing on any sort of scalable level, all of our cryptographic protection today is not going to be much good. So quantum computing bothers me more than AI.
I'm not sure I've even known much about that to even be a worry for me yet. So we'll lean on you to let us know when to start to worry and the house is on fire. But it's nice to hear you positive a bit positive about the growth or the adoption. I mean, everyone still feels like there's a lot of talk and there's nothing really moving. But from your perspective, if you're seeing that in the space of 6 months, there's been more adoption, that's definitely something that is positive to look at. What's your little projection in terms of the pace of this digital trade assets becoming more mainstream within the next 3 to 5 years? What do you imagine we'll be able to see within this space of time? And it's okay for it to be off, it's just like a guesstimate.
Well, I mean, I know, for instance, there are quite a few initiatives that are aiming to have full digitalisation by 2030, which I had to do a little quick bit of maths there and realise that is within your time frame. So that's 3 to 5 years. And as I said, I don't think that's too unrealistic, because what I imagine will happen is we'll see another 2 or 3 years of sort of stop-start, quite patchy take-up, but there will become a tipping point where the fear of changing things gives way to FOMO, and maybe it isn't just FOMO, it's it's necessity. It's not just you don't want to miss out, but if you don't get on board, you're going to be left behind. And of course, I mean that happens with pretty much everything that we've seen. The commercial internet developed in that way. I remember, and I might have even said it on this podcast before, because I do say it a lot, but because I think it is so telling. There was a Time magazine cover from 1966 that said, "Remote shopping, whilst feasible, will never take off." And of course now, I mean, nobody really does any shopping other than online in any major way. So, it just takes a while. And I certainly don't think it's going to take that long. So from 1966 to 2006, whenever that sort of really happened. But I do think that here where we've got, technology is moving on so much quicker than it was between 1960 and, the 2000s. So we've got that. And I just think there are more drivers now. So I think that 2 or 3 years, it will be more stop-start, and then we will see that snowball really start to accelerate down the hill, I think.
I think that's a very exciting future to see the pace and, all the little things that will come through, everyone discovering how much more efficient that we can be, and sort of letting down our hair and relaxing a little bit, because I think there's a stage of wariness about, what if we change and what ifs. It'll be very refreshing to just see how we change from that black and white to color TV, as we said at the WITTP event. All right, before I let you go, Sarah, we have a new segment called Trade Secrets, where hopefully they're lighthearted. It's one lighthearted question and fun question about you. And I tend to get the guests to pick from the number 1 to 30, but you're not allowed to pick number 15 because everyone seems to pick that. So pick a number from 1 to 30 for your question.
9.
Question 9. Okay. What's your go-to productivity hack for tackling busy days?
Don't look at your full to-do list. Because what I find when I do that, I sort of get paralyzed by, I'm never going to get through all this. So bite size, baby steps through it, one at a time, just work through and tick them off. Don't just keep looking at how much is left. It's like when you're climbing something, don't look down. Yeah. Just look at what the next thing on the list is. That's the only way I can do it.
That's a good one. That's a really good one. Just keep moving. Take
just
all the tasks one after the other, and probably when you're at the last one, then you can look at what you've done all through the day. Thank you so much for that. Well, this has been a really great conversation. It's good to see the intersection between the law, digital assets, and trade finance. A lot of work to be done, but I'm sure that we will get there in the very, very near future. A huge thank you to you, Sarah, for just making the time to share your valuable experience with us here in this podcast.
It's a pleasure. Absolute pleasure. And Noodles enjoyed it as well, as you can see.
I can see that. Yes, absolutely enjoyed it. I could see you just listening in. Well, to our listeners, if you found this discussion valuable, don't forget to subscribe to the Trade Finance Distribution Initiative Podcast for more expert insights on the latest trends in trade finance. Thanks for tuning in. My name is Doris Kononowicz. I'll see you on the next episode.